take over. Hey, Jamie and Steve, hope you had a good Thanksgiving, and how was Monday?
Hey, Scott, thank you very much. Yes, indeed, it was a good holiday, and it passed too quickly, as they always do. Steve, what's going on over there in your side of the country?
Oh, not much. Just getting back to it on Monday.
Absolutely. Well, I want to thank everybody for popping in. Today is the 30th, last office hours of November. It's an active group today. See a lot of questions popping in. I answered one via text, and to Brock's question, which brokers are you adding? Before we get rolling here, if you're referring to Brokerage Plus, well, we just got a new development build today, and we'll be testing out the E-Trade port version of Brokerage Plus. We also have the Ameritrade version in testing. So depending on how much longer testing is required, it's always a good sign when we're in testing because you know it's not too far away. But we've got E-Trade and Ameritrade both in the testing phases. I was thinking that it's Ameritrade that's going to be available in the production version first, but you never know. We'll see which one comes out first, but those two are definitely in the development hopper and being tested. All right, so moving right along here, let's just make sure we get the legal mumbo jumbo taken care of, make the attorneys sleep a little easier here, and just want to make sure that everyone in attendance is aware of the fact that all the information that we share with you, not only in this 5 o'clock Eastern webinar, but Tuesdays, Wednesdays, Thursdays as well, or any of the other webinars that we host throughout the week, are for educational purposes only. Meaning, if you need investment advice, what to buy, when to sell it, all that good stuff, do yourself a favor, seek out a registered investment advisor or someone like a Series 7 licensed stockbroker that's legally allowed to dispense buy and sell information to you. So just once again, everything we share with you guys in our webinars is for educational purposes only. And always like to take a little bit of time at the top of the hour, especially since we just wound down the 2-week-long test drive, which had quite a few people in it. Probably got some new people in here as well. So we've built quite the community around the TI technology. It all kind of starts over here on the left. And you know what I just realized? I forgot to get my pin up here. So give me 1 second here while I find that guy. There we go. Okay, so as I was saying, it all starts off over here in the upper left-hand corner with the trading room hosted by Barry Anderson. Barry's going to open the doors to the trading room about 30 minutes before the open each day. It's a great place to go, whether you're a brand new trader or a seasoned pro. Could be 300, 400, 500 people in there on any given day. And the next best thing other than Barry moderating the room is the price, which is free, right? So if you've shopped around for decent trading rooms on the web or whatnot, you've probably found out that none of them worth their salt are free. Not the case with us. It's one of the added benefits that you get when you're part of the TI community. And Barry does a fantastic job not only at moderating such a large crowd, but sharing his trading techniques and the way he uses the TI tech on a daily basis, and loves to answer questions as well. So get in there and use the trading room if you have not been doing so. On the 5 p.m. Eastern circuit, you got me and Steve on Mondays with office hours. Steve's going to take the helm tomorrow for the trade of the week, which, by the way, was off to a cracking start. I see today, Steve. Dan Merkin, our CEO and founder, along with our Chief Technical Officer, Brad Williams, taking the helm on Wednesdays for the Q&A demo, typically giving you a peek at new features coming down the developmental pipeline and whatnot. And Andy's going to round out the 5 p.m. Eastern slots on Thursday with Trading Studio, and I ride shotgun with him. And of course, as always, Monday through Friday, we've got the daily support session going from 12 p.m. to 1 p.m. Eastern, which is a great place to get anything addressed related to TI. Could be anything. Could be how to use Brokerage Plus. Hey, help me with the strategy. Nothing is off the table. So on the next slide here, you'll see how to get to the support session. This URL here is static. Simply go to trade-ideas.com/live, bookmark that URL. That'll get you to the live support session each and every day. When it's not the daily support session, Barry is also streaming the trading room out to YouTube as well, but from 12 p.m. to 1 p.m. Eastern every day, someone comes in and takes the helm 1 hour of Q&A, anything TI related, so make use of that. And we've also got some great educational resources available on our website and our YouTube channel as well. This is the TI University series that you're seeing right here. And especially if you're new to the product, if you came to us from the test drive or some other way, this is a great 4-part series that you can watch, and it's going to help you get over that learning curve sooner than later, which is always a good thing. 101, 201, 301, and 401. All of these things can be found at the Trade Ideas YouTube channel. Just pull up the YouTube channel for TI, search for TI University, and they'll come right up for you. And just always like to give a peek at the expanding user base. Of course, 2016, when we added the first AI module, of course, we now have 3 of those. And hopefully we're gonna have a swing trading module coming out before too long, but for now, we just have 3 AI modules, all based around intraday timeframes. But you can see the steady increase in our user base, and probably gonna see a bigger orange bar as we creep into 2021 as well. In addition to that, I expect these numbers to jump a lot when we finally do get the Ameritrade and the E-Trade version of Brokerage Plus all ironed out, because this is strictly with Interactive Brokers. We've had the Brokerage Plus plugged in with them for quite a while. They were the first ones. Funny thing is, we went with them because they had the most competitive commission structure, but a lot has changed. We had the advent of the $0 broker dealers, so Ameritrade and E-Trade will be our first foray into the $0 structure, so to speak. And as you can see here, the blue bars are live orders that have been filled, and the orange orders are demo orders. And each and every month, a little bit of the orange gets converted into blue as people test their strategies and decide to go live with them. So not only will we probably see these continue with Interactive, but we're going to have 2 brand new brokers to fold into this data. So I would expect these bars, both orange and blue, to get a lot bigger over the course of 2021. Going to be exciting. And here we are, today's agenda. So I see a couple of questions scrolling in here. Looks like Steve's knocking them out pretty good. So without further ado, now comes the time where I'm probably going to kick it over to Steve. We're going to take a look at the broader tracking ETFs and see where we've gone, where we might be going. So Steve, if you're ready, I'll kick it over to you and we can take a look at those things.
Let me get rid of the annoying English guy over at IB.
Sure.
He keeps telling us about market data.
Yeah. Connection lost, connection reestablished.
Yeah, they're a little busy over there on the questions box there, Jamie, so I'll let you catch up while I speak.
Sure, you have.
Yeah, here we go. All right, so welcome to my desktop, everybody. We're going to start with a big old SPY chart. And we're going to kind of look at it in this perspective today, all right? This is interesting looking bullishness. I mean, this is just about as bullish kind of as it gets in terms of when we just look at a snapshot of that time frame. But what I want to do is just say, all right, well, where have we come from? Let's just start there. Okay, well, we've come from down here, the horrific sell-off, the bear market lasting, I believe, a half a day, down to 218 in the SPY, geez, and now we're up here again, just resting, looking super bullish. No bear case to be made, obviously. Like I always say, that's just really nice looking. Pulled back, tapped on the 10-day moving average, and popped right back up. Okay, 360. Well, geez, we've almost doubled. I mean, from 218 to 360 in 1 year. Not to mention, we started the year back here. This is quite the range, very unprecedented. There comes a point in time where you just start to wonder how much juice is left in this rocket. I mean, what can we do? There's no upside resistance that we can look at. We can start playing with Fibonacci extensions and things, which I'm not going to do. But here's what I am going to do. I'm going to say, before I draw this, I'm going to say that coming into today, I was probably 80% invested in my accounts, and the accounts that I'm trading. My mom handed me her account now, which was smart because she participated in a good November. But today was a massive day of clearing a lot of decks for me. I just got kind of a weird trader's gut feeling that I might want to examine what things look like up here. Yes, again, that's a nice looking pattern the last few days, but what is the bigger picture? Aside from the fact I've just got kind of a weird feeling that things are about to get a little goofy on the macro scale out there, and market might not be ready for it. So I'm going to take a great November and I'm going to kind of book it, because sometimes when the market gets that easy, believe me, I'm not trying to say the market's easy, but November was about as easy as this kind of stuff can get. And hopefully you participated in some of it. Don't beat yourself up if you didn't get enough of it. It was a great November and I took a lot off the table today. I'm only like 10% invested. Now, one of the things this morning and even over the weekend that I looked at was to say, is there any reason why I just can't get really attracted to this setup here that we've had and just get fully long again? And one of the things that Michael over the weekend actually helped me avoid a trade of the week that I didn't want to call, and we'll get to the trade of the week tomorrow and maybe a little bit today. But there's an indicator that we can use called RSI, which will show us how much steam might be coming out of the move. Let's extend this a little bit and try and make it a bit more obvious. So we have what's called divergence staring us right in the face. These are the lower high peaks of our relative strength indicator using a 14 period. That seems to be right off the shelf for our default setting here. It's a significant lower high in the RSI, while at the same time, corresponding to price, we have a slightly bullish tint to the upside. This, my friends, is what we call divergence. There is no parity between the two. So what we're starting to see are kind of internal rumblings here that are not really favorable for me anyway, to want to come up and just fully believe that it's time to just put your foot to the metal again after this giant move. Again, I'm going to just eyeball that and say it's an 80% move off lows there. You know, a double would have been up in the 440s and we're at the 360. We'll call it a 70% move. So I'm not going to trust this. And again, I just think there's some weird things about ready to go down out there. But we talk about price and we talk about technicals. And so I'm just going to put all that together and just kind of go on record as saying I'm not really bullish right now, even though, let's get rid of that, remove, even though the chart looks really nice. I'm not buying it. Literally not buying it. I thinned out of a lot of stuff today. I'm going to sit back and see what the next few weeks have to hold, see what emerging sectors might come out. It's been an incredible run in the alternative energies and the electric vehicles and things like that. Just quick move over to the IWM. Been a really nice move. We talked about the strength in the IWM recently. A little bit of a red candle there, but still intact. You know, we'll see. When this was the one that was leading the way as well, and now it's got a little bit heavy today. Lastly, the NASDAQ looks just super as well, but I think you could make the same case. Let's just see what happens if we go to indicators and look for possible divergence there on the NASDAQ. Oh yeah, we got it there too. Pretty prevalent. That one's more of a flat, but still, any old day of the week, that's a double handle. That's just about as bullish as it gets. But coming off of a run down here, how much is the NASDAQ? The NASDAQ's doubled, I can tell you that. 169, almost a double on the NASDAQ. So at some point, the bigger picture and the law of averages has to come back into play. And that's kind of what I'm thinking right now. As soon as I get my system back here, it likes to freeze up on me when I broadcast sometimes. We'll just do a quick removal of that indicator. And the trade of the week started off really well. And again, on the short list, there was something else, but it was diverging. And Michael pointed that out to me again over the weekend, and it made me think about, well, is the market diverging? I had no idea it was diverging that much. Trade of the week is a small cap, kind of running, had a beautiful move back here. This is a rare earth company. And again, I'm kind of playing back into the sectors that have been hot recently. Electric vehicles have to be powered by batteries, and batteries have to be powered by rare earth materials such as Westwater Resources, excuse me. So a really nice pop showing this thing does want to have some second life. Consolidation coming into today, looking really nice on the, there it is, looking really nice on that moving average, and then boom, a nice pop today. I think we should see some follow through tomorrow. We'll see. Looking left in the chart, you know, maybe some early areas right there. We'll call that the $9 level. If we can get to $9 in the next day or two, I'll be taking some profits, guarantee you that. But we'll talk more about that tomorrow in my webinar for Trade of the Week, and we have an extra day of data to put on there as well. So That's all I got. I mean, to summarize, chart looks great if you look at this time frame, but when you back up and look at the bigger picture, we've come a long way. We've got a lot of divergence. Is the airplane kind of running out of lift up here? And I'll tell you, I've been around enough. That was the reason I got out. I'm just going to take a stand. All right, I'm not going to wait and see what happens, because as Jamie knows, when that day comes, you don't get a wait and see what happens. You get an absolute crushing blow on the open, and you get locked up Ameritrade, locked up E-Trade, everybody trying to get out at once, and it's just not fun. So I'm going to enjoy the spoils of a good November and sit back and watch a little bit with no anxiety. That's it, Jamie.
Good stuff as always, Steve. Thank you very much. Let me grab it here. Okay, should be back on my desktop. All right, thank you for that, Steve. All right, so expectations today. As you regular attendees know, I always like to consult my compare count window, and it was pretty accurate today on the initial move. We saw readings of 57% bearish after the first 15 minutes, and for you new folks out there, this is what we call a compare count window. In Trade Ideas, you could always spawn one by going to New and just clicking on Compare Count, because this window does exactly that. It lets you configure two opposing strategies, stocks hitting highs, stocks hitting lows, as we're seeing in this case. And the little caveat here is only looking at stocks doing that with high volume, with market cap above $4 billion in the first 15 minutes. To try to get a little idea of what the institutions might be up to for the day. That's the theory behind it in any case. So after the first 15 minutes, I saw a 57% bearish case today. And if we kind of pull the SPY back up here, here's the first 15-minute candle. Let's see, where'd my pen run up to? First 15-minute candle here, and then look what we did for the next 1, 2, 3, 4 for the next hour. We did sell off, had a pretty good little down move there before recouping and bouncing back, not getting all of it back, but a pretty good portion of it. So not a bad leading indicator today, helping set the tone for some downside action today in the overall markets. Nothing to write home about, but a pretty good move there. Now we're going to move on to the Holly recap. Holly was pretty active today, and there are several things, more importantly, 3 different types of things that I like to analyze in Holly's performance on a daily basis. First, we look at any stocks that might have had decent, moderate, and conservative spread. Were there any Holly plays where a good opportunity presented itself to add to the position? And I can tell you right now, there wasn't a whole lot of that today, because we need, nice, consistent patterns, right? And those were kind of few and far between today, especially for the stuff that I typically look for. We'll even get into that a little bit later on when we take a look at a couple of the opening range breaks that were that met criteria. But it was really hard to find those as well today because of the whipsaw action of the market. Those animals just weren't in the forest today. A few, but not many. The third thing I like to look at in Holly plays is trade around opportunities, which have to do with the stop loss area. So we'll talk about that in GTHX. The funny thing is today, Holly did her own trade around in GTHX today, and we'll get into that in just a minute. So first and foremost, let's count up the signals today. If we look at the channel bar over here, we had 5 from Neo, we had 1 from 2.0, and 1.0 kicking out the most signals. So we had a total of 15 signals today from the 3 different AI modules. And now let's take a look at those specific trades. And here I have the all trades blotter, where we can see all of the trades that each and every module spit out today. We could see which module generated the trade by looking at the segment column over here. So notice the columns, especially you new folks out there. We've got conservative profit, we got moderate profit, and we've got aggressive profit. Now, real quick here before we dive into these figures, big difference between conservative and moderate profit. There's 5 potential reasons why the AI could close out a trade in conservative mode. That would be the 3 main ones. Either a stop loss gets hit, profit target gets hit, or the timed hold expires. There are also 2 other additional reasons in conservative mode why an exit could be made, and those come in the form of reduced risk and profit save. which we had a little bit of both today, only one reduced risk, plenty of profit saves. Now, notice the difference here between conservative and moderate profit mode, and I've got my blotter sorted by moderate profit mode. Conservative profit in the FLIR short, $232.92, whereas moderate profit showing not quite, well, over a double on that. Okay, so 460 would be a double, 460-ish, and we're coming in at 585. So a lot of spread between conservative and moderate profit here. So to help illustrate that, we're going to go ahead and get FLIR up on the chart. Keep in mind this was a short play. So now we have FLIR pulled up on the intraday 15-minute candle chart. This is the opening bar right here, the green, and in the third 15-minute candle, that's where Holly, to be exact, 9:04 Central Standard Time, decided that she was going to take a little bit of this short right up here at 39.63. Right off the bat, looking back in retrospect, a beautiful entry, not the top, but pretty close to it, and the type of action that we like, immediate gratification. This is one that just kind of went immediately, and we always like that as traders. Sometimes it takes a little bit longer, but just a beautiful move here. And note the shaded area right here, right about here in this candle, coinciding with the end of the shaded area. This is where the AI decided to get out. We had a nice move, then we had this little consolidation area. So when you see these types of patterns form, whether it's long or short, that's when the AI is likely to execute a profit save or a reduced risk if it was out of the money. But in this case, it executes a profit save, doesn't wait for the profit target, the time to hold. Of course, the stop loss wasn't any risk of being hit there, and just books the $232 profit. We could round that up to $233. But before I move on here, what are these numbers all based around? Okay, and these numbers here are based around risking $100 per trade. Okay, that's the way I have my trade instructions set up, and you can easily change that if you go to the TI toolbar, click on Tools, Options, and if we click on AI Trade Size, you can see I'm risking $100 per trade. So that's what all of these numbers are based around here, as well as the share size based on the stop loss. So entry price of 39.63. It was a pretty tight stop on this one, about 26 cents, but never came close to doing it. So the trade worked, and based around a 26 cents stop, we could have been in 385 shares, almost 400 shares, just to explain that logic to you guys. So during the day, when we see the AI exiting the trade right here where the little pink mark is, we can look at it and go, okay, we got the initial down move. It's consolidating a little bit, but I think there might be more left in this trade. So we could ignore the AI's exit signal. And had we done that and held to the close, we could have made more than double conservative mode. But of course, we would have been taking more risk in the hopes that the stock was going to continue down. So a very nice spread developed between conservative and moderate profit and FLIR. All we had to do was ignore the AI stop here, just a little bit more sideways action before finally releasing about an hour and 45 minutes into before the close. Now, notice this little consolidation area here. As I said earlier, there weren't a whole lot of good add-on opportunities. Add-on opportunities in my book typically like to present themselves earlier in the day, but this one technically fits the bill. There wasn't a whole lot left, a whole lot of meat left on the bone, because once this little basing pattern sets up, we could have played it for another range break about right here, but that would have only been from what, 38.74, and the low of that candle was 38.05 or change, 38.5 and change. So not a bad percentage move from here and here. And technically this would have fit the bill for an add-on as this little range here was penetrated. So technically it fits the bill for an add-on, but typically like to see those materialize a little bit earlier in the day. Now, as you can see here, not a whole lot of spread in the GTHX trade, $199, we'll just call it 200 in conservative mode. And had we held to the close, $241.28. So nothing to write home about there, but a little bit more than conservative profit. What's interesting about GTHX today is it was a double signal. And what I mean by that is the first one came down here. The first one was 7 minutes into the open. The breakout long strategy honed in on it. And you can see the first buy signal right here followed immediately in the next 15-minute candle with a stop out. Now, notice the aggressive profit value here. Yep, we got stopped out. We lose $100 on the first attempt. And typically what I like to do is point out decent trade arounds. What is the definition of a decent trade around? Well, we have a perfect example of that today. So let's pretend for a moment that Holly did not make a second entry up here, but notice how the stock acted when it got stopped out. Notice that little doji candle in that second 15-minute candle right there. Sellers took it down, couldn't maintain control. Buyers took it right back up. Then we had this little consolidation area right here. So typically on any other given day, if I saw this type of action, boom, just went down here and tickled the stop area and then start consolidating back up here around the entry line, I'd probably take a second pop at that if I'd been stopped out originally. But look, Holly, in essence, since this was triggered again by the pullback long strategy, about 45 minutes later, in essence, and this is the first time I've seen this, in essence, Holly basically executed her own trade around here, okay? Now, that's not the way that the AI was thinking about it. It just happened to have been triggered in another strategy after the stop out. But this is a perfect example of a trade around, noticing how the stock operated or acted around that stop area, just a quick wick and right back up, you know, acted as a perfect little trampoline or a pivot point there. A lot of the times they'll stay below it and keep on going down, as we see in RGS, okay? Buy up here, stop was hit, boom, way below the stop area. Stop area not acting as a trampoline or a springboard around here, all right? Getting way below it, coming back up here, getting rejected again, and then just drifting further the rest of the day. Same thing in this guy, okay? Comes down here, gets stopped out, hems and haws around it a little bit, but no, does not act as a springboard to the north. Goes south again, stays well below it. But if you see them just bouncing around, bouncing off of that stop area, just like GTHX did on that first try, well, then that's when you might want to think about a second entry. Steve always likes to say the second mouse gets the cheese sometimes, and this was the perfect example of that. It just so happened that the AI triggered it again and gave us a perfect example of an AI executed, what we could call trade around in that GTHX. And not a bad percentage winner in that one either. Now, we did have a little bit of spread in Luna. Difference between, we'll just call it 28, 29 bucks and 112 bucks. It's quite the multiple there. Luna also being a short sell here. Of course, this one, you know, acting nice, getting a sell up here, coming back down, having to sit a wiggle all the way back up to the entry level and a little bit more. If I squish my chart up here, we should be able to see the stop. So even though it did throw a little bit of a wiggle here, not even getting halfway up to the stop area before finally releasing after it goes back through the entry price and then consolidating for the rest of the day. So holding that one, ignoring the AI's profit save again, big difference between 30 bucks, not quite 120, a little over a 3xer on Luna there. So just keep that in mind as you move forward and you interact with the AI. When you're seeing the AI exit in profit save or reduce risk, pull that chart up, size it up, decide, do I think this has more in it? And if you do, ignore that AI exit signal, take a little bit more risk, and hopefully you can capture some of the spread that presents itself between conservative and moderate profit there. All right, Steve, let's see, before I segue here, just looking, I see Ramon's asking an AI question there. Does Holly have a simulation period where it trades fiat money before live funds? Well, Ramon, yes, and that really is what we have designed Brokerage Plus for. You can see all the Holly trades that I mimicked today in simulation mode. I had all of the AI trades active. All right. So anytime a signal came through, I would see it pop up in my Brokerage Plus. And I would urge each and every person out there, if you're thinking about engaging the AI in live auto mode, you're definitely going to want to do it in simulation mode first to get a feel for it, because we have developed a pretty accurate paper trading mode, not only for manual trades, but for the AI as well. And one thing I want to point out that I haven't covered in quite some time is it's pretty good at simulating slippage, because whatever the price is from the time that the AI executed, you're going to take some slippage. Now, in the case of FLIR today, I think we actually had, well, it wasn't FLIR, but in one of these today, we actually had positive slippage, which is possible. You get a better price than the AI if the stock is fast moving. Most of the time, you're going to take negative slippage. So FLIR is a perfect example of normal slippage. It was a short play, and if we see up here the AI, when the alert was fired, the entry price for the AI was $39.63. In my account on the simulation, I got a worse price because it's a short play. So a cheaper price, you're getting a worse price. AI got $39.63, I got $39.58, so that is a 5-cent slip. I got a 5-cent worse price than the AI in FLIR today. And slippage is a constant. It's always going to be there due to latency, right? And the markets move fast these days. Big difference between the thing actually happening at the exchange. By the time the information gets to us, the stock might have moved a nickel, as it did in FLIR here. If we just take a look at one more here, let's look at FT, entry price of 256. What did I get? And this is a long, so I got a higher price. I took a 3-cent slip in FT. So if you're thinking about going auto in the AI, highly urge you to participate in demo mode, observe slippage, and of course, if you're trading in a $0 broker environment, which is not possible yet, but is coming down the pipeline, you don't have to worry about commission. Right now in IB, you still have to worry about folding commissions into your results as well. And 15 trades today, let's say you're averaging $3 on the in and out, you'd have to subtract another $45 in commission plus your slippage. So hopefully that makes sense there. And as far as fiat money goes, yes, that is what the AI is using. Fiat, in this case, being US dollars. And typically if you are out of the United States and you're trading our markets, typically you have to convert your monies into US dollars before trading is available there. All right, so moving right along here. Any questions about Holly before I go on to some other content here? Not a whole lot of spread, or not a whole lot of stocks exhibiting that spread, just FLIR and Luna, no add-ons, and then a decent trade around and a dual signal in GTHX there. Okay, and typically what I like to showcase are some of the opening range breaks. It's a very simple pattern, focusing on the ones exhibiting really a high volume, because that increases our chances of success, or increases our chances of the stocks moving in the direction that we hope they're going to. So where do I find these plays? I find them from these two alert windows right here, which are stocks hitting highs for the opening range breaks, and stocks hitting lows for the downside opening range breaks. And usually these windows are spitting them out left and right. I'd say on any given day, it might produce 5 or 6 where the timing is appropriate. Today was a little bit different. We had the swoon down and then we had the grind back up. So a lot of charts are real stretched out today. And typically we like to find ones that are consolidating nicely. It was a little bit more of a arduous task today, but ironically, these are the last few ticker symbols that were coming through today, and these just happen to be, keeping in mind that the market closes at 3 o'clock my time, these just happen to be the two that looked the prettiest today. CAAS to the upside, ORMP to the downside. So let's just take a look at those. ORMP, All right, so this one happened pretty quickly here from the open, so I'm gonna have to go back to the 5-minute chart so we have something decent to look at here. So in ORMP, clearly a gap up, and then the sellers took control right off the bat. So not a lot of sense to be made out of these first 3 or even first 4 5-minute candles. The first 20 minutes, nothing but selling. But we did get a small area of consolidation, just enough to make sense out of what might be going on there. Big seller, decent gap, big seller in charge. And then once we get down to the 20-minute mark, we get some nice sideways consolidation here. Of course, the high is way up here, but we're focusing on this little consolidation area, so I've marked the lines accordingly. Once we get down here to this break, was it happening on big volume? Well, let's see how ORMP finished on the day. You know, it only finished at 42 times relative volume, as we can see right there. So on a relative volume scale, 1 being normal, this thing pumped out some decent volume today. Finished at 7.3 million. The little guy usually only kicks out about 273,000 over the 3-month average. So there was definitely volume in ORMP today. Pharmaceutical stock, no big surprise there. Some of the biggest movers, of course, first it was all the big pharma stocks due to the COVID thing. Then it became recently the electric vehicle manufacturers and all the surrounding infrastructure, as Steve was pointing out, like batteries and rare earth minerals and all that good stuff. So no big surprise to see that this was a pharmaceutical, but we got the nice little break right here to lows, and then a little consolidation, but a very orderly march down in the ORMP today. And we had the assistance of massive volume as well. So looking at the entry price up here, around about the 483 area, and before it was all said and done, maximum profit potential, we'll just call that 420. So 60 cents on a $4 stock from a percentage move, not too shabby. This little area up here was your risk, because if we made the entry right here, typically want to take the higher point of the prior 15 minutes. Since these are 5-minute candles, we got 5, 10, 15 be the top of that wick right there. So we've got a nice risk area, and we could probably put this risk area 3, maybe even 4 times into the reward area, and that's definitely what we want to look for when we're assessing risk on a trade. So a decent short in ORMP today. And then the only other one that I could find that was decent on the long side, once again, happened a little bit later in the day. Took a long time for this one to materialize, and no big surprise there. Check out the industry there. China automotive. Now, talk about volume, ladies and gentlemen. Check out that closing relative volume value right there, 1.11, over 1,000 times relative volume. This stock on the 3-month average usually kicking out about 111,000 is what it looks like, and finished the day turning out 87 million shares, and there's only 11.4 million in the float. So this float flipped over many, many times today, okay? And this is a perfect example of what happens when big volume comes into a low float stock. You can get some massive moves both to the up and the downside, but as you can see here, low was put in right about 9:45, about an hour and 15 minutes into the open. High had already been put in, so we just go range bound. And later on in the day, about an hour and 20 minutes before the close, we get that pop. We get that opening range break right about the 779 level. And this little thing ran almost 3 points up to around 1050. So once again, from a percentage value, nice risk to reward ratio. If we were assessing our risk here, 5, 10, 15, risk is going to be about right there. Reward area is going to be up here. So once again, not exactly easy to find these things today, but between ORMP and CAAS, some of the better examples on the long and the short side. And once again, why do I like these patterns so much? Because of the simplicity that's involved. You know, we mark off a high, we mark off a low, and then we wait for the stock to break either the high or the low. And of course, we want a nice, calm consolidation period leading up to the break. So these windows not near as productive as they have been in the past, but as Steve was saying, you know, a little bit of a disturbance in the force, maybe some macro news coming down the pipeline, but the market only reiterating what Steve has already saying, stretched out stock patterns, not a lot of, concise things out there. So maybe we'll see a little bit more construction or constructive patterns tomorrow. Just not a whole lot of those guys to be found today. Right, Ahmed, ORB simply meaning opening range break. Could be up to the upside or the downside, but yes, that's what we call the orb. All right, I think we got just enough time here to sketch out a little revisit to the marble block alert window that I handed out last week, which was a optimized alert window that I handed out. And, marble block, kind of going back to Michelangelo, the sculptor, you start with a big block, and hopefully before it's all said and done, you have a sculpture, right? So the premise behind this one was to create a very large base based around a swing time of about a day and a half. And I handed this out, and it had really good statistical results here. And I said, well, now you guys can go to town, go through the optimization process. You can start off with a pretty decent data set here with a massive amount of trades. And what I mean by that is over 3,000 trades coming through, and we're already nice and green. So a perfect canvas or marble block, so to speak, because once, I could take this data set and create something, which I did, which we'll go through here in just a moment, but the choices are so great when we start going through the optimization tab and all the different filter settings and all the different alerts that can be plugged into this and still maintain a good data set, that you never know what you're going to get, okay? What I'm about to show you guys, you might go, oh, pretty interesting. But keep in mind, once we're done here, I'm only going to be showing you the addition of maybe 2 or 3 different filters that completely change the face of this back test and greatly reduce the number of total trades, because the back test period here, as you'll see, is 40 days. So 3,000 trades coming through in a 40-day period, way too many trades. So how can we go about maybe doing a little additional optimization and getting this whittled down into something that we might be able to use, which still is showing favorable statistical results, okay? So just to rehash here, the reason I handed this out last week is because I used an option to backtest only the columns that I had present in the strategy. So I didn't have to worry about all the other filters. I just optimized by my 5-day, 10-day, and 20-day range, along with some VWAP things to see if anything stuck out. That's what I did first to come up with this large data set with pretty favorable results. And then, of course, when I handed it out last week, I said, now you guys go to town, do a little optimization of your own, and see what you find. Maybe some of you did, maybe some of you didn't, but let me show you the spin that I just put on it, and I'll drop this into the chat panel when we're done, and you guys can continue to monitor it. So what I did is the following. This is what I ended up with after just a few optimizations, but let's see what it showed first. I don't know why I just killed that. Let me get it back up. Yeah, Dave and Sam, I see your comments there. So, anybody that generates something good that's different than what I'm about to show you, by all means, feel free to share it. Or if it's too good and it's working, feel free to hoard it for yourself. I completely understand. So this is what we got on the original, 3,023 trades. Looking at the daily, not too bad. Losing days, smaller than the winning days. And, every strategy is going to have its losing days. But we look down here and we see, okay, 12 winning days in a row, great. Most losing days in a row, 5. And then based on the metrics that we have plugged in over here, $2,000 a trade, we can see our biggest losing day, $3,000, biggest winning day, almost 12, but still way too many trades to feasibly use this thing, but good data nonetheless. So what I did, first and foremost, I ran it, came over here to optimization, didn't really worry about price or time of day or symbol or anything like that. I went straight to other filters because I knew what I was going to go examine. And the first thing I wanted to go to was the 15-minute RSI. So I went to 15-minute RSI. Now we're currently looking at intervals of 10. So let's just crank that down to a little bit lower there. So now we're looking at intervals of 5 on the 15-minute RSI. And now I can see, well, these guys don't seem to do, worth anything here. So let's look at the juicier success rates and where most of the money is coming from. And here's what my eyes go to. Now we've got green here and we've got green here, but we've got, not bad on the profit factor, 1.65, 1.73. But once we get down here, notice the profit gets a lot bigger than what we're seeing here, and the profit factor goes up significantly. And that would be with a minimum value of 35. And then I can see down here, things start to drop off once we get past this level right here. So the first change I made was we're going to set the minimum value to 35. And we're going to set that maximum value to 64.99. So keep in mind, what we're doing here is what I like to call a second tier optimization. You got the big fat base looking good through optimizing through your favorite columns, or me optimizing through my favorite columns. Now I'm going to re-optimize based on some of my favorite filter settings. All right, so after that, I'm thinking to myself, well, maybe we should attack multiple time frames on RSI. So we did 15-minute there. So now let's go to the 60-minute RSI. And didn't see as much here, but let's see, what did I go to here? I think it was right about here. Okay, so just once again, focusing on the juicier profit levels right here. Not bad, but percentage of success and profit factor seem to take a big jump. And all we would have to do here, don't have to worry about a maximum. We're just going to set the minimum. All right, and once I made those changes, I have to see if it helped or hurted. So, or hurted, not a word. Did it help or did it hurt? Let's find out. And to answer your question there, Ahmed, yes, any of the RSI filters that we have, in the product can be used in this fashion. Okay, so here are the original scan results that we see over here to the left, 3,023 trades. Just with the 15-minute and the 60-minute RSI, we've bumped up the profit factor. We've increased success rate from 50.5 to 53.9. We're still maintaining a decent spread between average winner and loser. So that appears to be a good change there. Now then, go back to the optimization. And not that I was looking at price, okay, but something kind of just jumped off the page initially when I went back through here and I saw price. And I think that you guys can see exactly what I saw based on what we're seeing in the upper quadrant of this panel here. It seems like this strategy typically does better. Look how things drop off significantly once we get past, let's just call it 40 bucks, all right? Once we get to $39.99 and beyond, look how the profit values drop and the profit factors tend to drop off too. Sure, we got some good stuff down here, but we got a lot of stuff in the middle, which brings up another good point. There's no way to tell it, well, let's just leave this off, but include these guys. So keep in mind, if you run into circumstances like this, you can make two different versions, okay? You can make one for the lower price stocks. You can manually just omit all these guys and go, okay, now I'm gonna make one for stocks between 65 and 74.99. Now, for now, what we're gonna do is we're just gonna cap it at 39.99. And then once we do that, we have to see how did it affect the back test, hurt or help. And yes, Waleed, I will give you some comments on that topic. Okay, so you know, a little bit more progress here, going from success rate of 53.9%. Now we're all the way up to 62.7%, and we shaved off an enormous amount of trades, still maintaining a decent spread between winner and loser, all while whittling down the number of trades. But guess what? We're not done yet. When I went back in again, price jumped out one more time. And it was about right here. This caught my eye. I'm like, well, $39.99 was good, but I think we could even juice this thing a little bit more if we cut it down a little bit more on the price, okay? So I did price optimization one more time. And let's just go back to we'll see if this version is close. It's funny because Andy and I always do this. We'll think that we can memorize all the steps, but we'll have one thing off. But I think that this is pretty much the finale here. We'll see how close it is to what I've duplicated or tried to go through manually here. With just a couple of simple optimizations based around the RSI filters and a little price digging here. Okay, so here was the final version. And once again, if we come back in here and look at the filters in play, what do we have? Here you can see all of these filters were part of the base except relative strength on the 15-minute right here, relative strength on the 60-minute, and then price. That's all I did to it from the original marble block. Now, Waleed was asking, what was the concept around the original marble block? And to go back in time here, it was stressed, the emphasis here was based on this option right here. Notice in the back test I have use all available columns, okay? But as Andy will tell you, and Steve and everybody else here that's a trader / trainer person, we found a lot of good strategies based around the range filters, the position in 5-day, 10-day, and 20-day range, right? So initially to create the marble block, all I did was show those columns and say use only the columns from the strategy for optimization process, okay? Notice I have these all displayed as columns. So getting back to your question, Waleed, to create the base, what I did is I only optimized initially by these ranges and distances from VWAP, okay? Once I had those settings in place, then I did some larger optimization and only went through and lopped off filters where I could eliminate enormous amounts of trades. And that's what created the marble block, okay? So I hope that makes sense. The whole period here on these trades is, let's see, make sure I don't get rid of the right one here. I'll tell you what, I'm just going to spin it one more time here and then we'll see. It's about a day and a half. So this is designed for swing trades. And yes, I will drop this into the chat panel here in just a moment. So on the hold time here, we're looking at getting out at the open day after tomorrow. And that's just for the backtest purposes, generating these results based on the long-term chart that's panning out. You know, if it looks good, you may want to hold longer than that. But this is optimized for get me out at the open day after tomorrow. So in other words, if you made a trade today, you'd be looking at sometime Wednesday. or the open on Wednesday. All right, so before I forget to do it, what I'm going to do here is I'm going to drop both of these in. That way you guys can do some optimization of your own for the original base. And we'll just call this the original base, and then this version here, which was optimized by me. So we had about 800 trades coming through here in a 40-day period. So that's probably an average of a little over 20-something trades a day. But that's not a bad ticker to watch. That's not a bad alert window. You know, if 20 stocks are coming through on a day and you're pulling them up as they come through, that's not too much activity, but you still may want to try to tap it down just a little bit more. All right, so here is the optimized version. Okay, so keep in mind, there might be a little bit more optimization on this second one if you want to get it down even further, you know, to maybe you want to get it down to half that trade count where it's only spitting out around 10 trades a day, because obviously you don't want to just jump into this headlong. You know that you have good odds to start with, but then secondary things like patterns, you know, is it adhering to the 10-period fast line or your other favorite moving average? So everybody's perception is going to be a little bit different. But you know, you've got that statistical probability on your side to start the trade. And then if you see the pattern that's conducive to you and you like what's going on, well, then that's a good reason to put a trade on. And that's about it for today, ladies and gentlemen. I didn't realize we'd eaten up so much time. Got a couple of minutes for Scott to walk us out here and let everybody know how they can save a little bit of money on a new subscription or an upgrade. So Scott, if you're ready, we're ready for you.
There's my mute button. All right, thanks, Jamie. Yeah, on the way out, couple items. Grab that earnings book before we change it over to our new indicators book. Just go to trade-ideas.com/earnings. It will teach you how to take advantage of earnings season, and it gives you a couple cloud links that you can import right into your layouts. Grab our podcast. We just released a new episode, an interview with Sean and one of our new team members, Chris Farley. So go to your favorite podcast app and search for Trade Ideas Podcast, hit subscribe, you download the newest episode, and then you can just download some of the previous episodes. We've also released some other interesting and insightful interviews this year. You can you can save 15% off your first month or year of Trade Ideas using holidays. You can also use that to do an upgrade from standard to premium. So grab that code. It's going to be good until the end of the year. If you have any questions, need some support, you can email us, info@trade-ideas.com. It goes into our help desk. And if you want to follow Jamie on Twitter, he's at QuantBot. Steve is at Today Trader. We've also got at Trade Ideas. And of course, find us on Facebook at Trade Ideas Pro and follow our page so you can share what we post with your friends. The recording of this webinar will be up later on tonight or tomorrow. You get an email reminder from GoToWebinar tomorrow with a link to the playlist where you can find it on our YouTube channel. And thank you, everyone. Thanks, Jamie. Thanks, Steve. Have a nice rest of your Monday.
Thank you very much, Scott. Thanks, everybody, for popping in. Thank you, Steve. We'll see you guys tomorrow.